Hello, it's Mark from Landmark Financial Services Group. I do know that we are living in very challenging times right now, and through all of this, I hope that you and your family are staying safe and healthy. I also recognize that not only is the virus causing health concerns, but it also has negatively impacted the financial markets in a very big way. If anybody wants to talk to me about their investments and how we're doing and where we think this is headed, I'm always available to talk about that. At the same time that there is a lot of challenges, there are oftentimes opportunities that come with that. And I'm going to talk about two opportunities that I want you to consider that may be interesting to you. And it has a sort of a tax and an investment impact. The two opportunities are considering Roth conversions, and the second is tax loss harvesting. Now in this video, we're going to talk about Roth conversion, and we'll do a separate video on tax loss harvesting. Okay, so we need to set some backdrop here. What is a Roth IRA? A Roth IRA is an IRA in which all the growth in the IRA will never be taxed. When you take it out in retirement, you will not be taxed on any of the earnings that were made inside that Roth IRA. That's compared to a traditional IRA where all of the growth is deferred, meaning that you will pay tax on it at some point, just not today. So, what is the idea? If you have an IRA and you want to consider converting it to a Roth IRA, there are a couple things to consider. When you do that, any amount of the conversion is going to become income for tax purposes. And you'd say, well, why do I want to generate more income at this time? That doesn't sound like a good idea. Well, let me walk you through it, and I'll do it with an example. Let's say you convert $10,000 from a traditional IRA to a Roth IRA, and you do it today where the market is down, meaning that your IRA is already pretty low. So we take $10,000 and we move it from this vehicle, which all the appreciation on that $10,000 would be taxed at some point, and we turn it into a different vehicle where all the appreciation going forward will not be taxed. Well, that can have some real impact, especially when the markets are down where they are today and all the future appreciation will not have a taxable impact to you. So that's the idea. Do you have to pay tax on it? Yes. And that $10,000 in my example, most, if not all of it, would be considered income, and you will have to pay taxes on that. So that's the downside. But the upside is very big because this future appreciation will not be taxed. And that has a big impact on your overall financial future. So that's one idea for today. I'm going to do a separate video on tax loss harvesting. And if you have any questions about any of this, please don't be afraid to reach out to me at 978-984-5425, or you can look us up on the web at lmfsg.com. Thanks.